JV Cycles here with an update on March the 8th. Viele Grüße an alle deutsche Zuschauer og hilsner til eventuelle norske som her. So let's have a look at my scenarios here. You know, I tried to give stable projections, stable forecasts. If I start to change my forecast from week to week, it means I'm not making good forecasts. A forecast should not change. That's a good forecast, staying the same week after week. So that bounce last Friday kind of made me uncertain, but no reason for that. We perfectly followed my scenario, and on Thursday we most likely made a 2-week oscillation low, and that should be the A part of an A-B-C correction, meaning that we should now start the bounce B. Probably all of next week should be in this bounce part of the correction. It's still possible to drop down on Monday to make a little bit more bottom formation before we start the bounce for real. Let's see. I think we zoom out, as I often do, and here we have the weekly data, my 3.5-year cycle in red, and we are now well over the middle of this yellow topping part of the cycle, and we soon enter the bearish part that goes into around next summer, 2026. And this 3.5-year cycle is showing weakness by it's not reaching the top of this trend channel, a bit similar to the last presidential period of Donald Trump. There we also didn't reach the top of the channel. But yeah, let's see how this bearish part develops. You know, it's no guarantee that it will be very bearish. It could be a sideways period of 12 to 18 months. But I have a suspicion we could have a pretty deep bear market here. And I have my 17-week cycle here. And it tells me I should look for a low around May, and the next one is around September. You know, sometimes in my videos I realized last week, or was it on a quick update, I may say the wrong month. So in the last video I said this correction could last into end of April, but I meant end of March. But the cycle is bearish into around May, so we'll come back to that. If we have begun a bear market, we still have no confirmation of a bear market, but so the first part is, first you have a correction that kind of ruins the trend, but you don't get the confirmation of a bear market. And the next part is you make a lower shoulder, and then the market panic begins. But you know, that may be all of it. That could be the end of the bear market, and then we go on to rally. But in this part of the 28-year cycle, this could all just be the start of a longer bear market, which I suspect will be the case. But at this part, we still haven't completed this first possible move before we start making the bigger shoulder. But how will we? What will the market do into this cycle low around May? Well, the thing is, the market does not necessarily oscillate exactly like this cycle, because the market likes a 10-week oscillation. And how does that fit into a 17-week cycle? Also, we have the 4-week cycle. That's a cycle. The 17-week cycle is a cycle, but the 10 to 12-week oscillation, that's a market oscillation, and a bit of a mystery to me, because, is it a cycle or is it just an oscillation? And this 10 weeks oscillation, it's normally like this blue one here, but as I showed back here, we may have a little bit a longer variant, and a third one even longer than that one. So there's some variation to this 10-week oscillation. But if you now look at this current situation, we see we began a 10-week oscillation here. So and this could end around end of March, and then we could have another one which makes a low around end of May, perhaps around the cycle low. So here we have 2 oscillations within one of these cycles. But there's no guarantee exactly how this first oscillation will play out. Right now it looks like we should have a bounce B and then the last move down C, but it could be we could start making some kind of a bottom formation here, trying to hold this horizontal support, and then we could squeeze all the way back up to all-time highs, and then we get the big nasty correction in April, May. So still we have to be open-minded about that. Looking at my 2 VIX projections, they suggest also that it's time for a bounce B and then the C move down, A, B, C. The other one, very similar, we're over here. Now we should bounce up with B and then down with C. However, these projections are using bull market rules, so don't look too much at them, because we are maybe now following bear market rules. Also, the wavelets, we pretty much completed this down to my target for this first move, and we could be in such a situation, and I have a projection that looks like this, expecting a low around Friday, Monday. I'm not quite satisfied with this downside. I would be much more happy if we at least made a double low on Monday and then began the rally. And we could rally into next weekend, Friday, Monday, and then continue down into end of March. And it is kind of interesting to see, this is the previous bull market top, and this formation is in fact pretty much exactly what we have now. But there's a big difference here, because up here we had a 17-week cycle low at this point, but now we did not have a 17-week cycle low here, but rather here in the middle. So these 2 possible bull market tops look very similar, but regarding cycles they are very different. So I think this one should play out different. So going on, I think we have it all, just the hourly data for Dow Jones Industrial. We do have a nice 2-week oscillation going here. This one probably should be like this, meaning that the low on Friday, was just some hours away from the ideal low. So that's 2-week oscillation low. We did pretty much reach my target from this arrow here. Looking at the wavelets, this looks like a perfect bullish setup. I would really love to see us drop down Monday, completing some kind of a bottom formation, but the wavelets do not look like that. They look ready for bouncing up, and so that's it for today, and it's nice to see how the market behaves in such a predictable manner at this time. So let's hope that continues.